In this video, I'm going to talk about tax treatment of the life insurance. So this is a general overview on how some, tax implications regarding a life insurance. So basically, let's say for many people, they talk about life insurance, then if it's treated as pure life insurance, you can see, so you only buy the life insurance, you pay the premium, you want to get the death benefit when insured dies. When the beneficiary receives the death benefit, this is income tax free to the beneficiary. So that's just the pure life insurance. That's the income tax free on the death benefit to the beneficiary. So if you use life insurance as a saving vehicle, so basically if you buy a whole life insurance, so you have a cash value, right? When you want to build up those cash value, so then you will understand that during the policy owner's lifetime, the accumulated cash value within the policy is allowed to grow tax deferral until it is surrendered. So this is commonly referred as inside build-up. So basically say, you have bought this whole life insurance, have like a saving functions, right? You have the cash value on this policy. So those cash value, because your partially of your premium gonna go to this cash value. So those cash value, you have some guaranteed rate to increase and grow. So you your interest on those cash values, you are not being taxed. So it's deferred, to grow your cash value, right? So this is kind of compared to a mutual funds. You can see if you receive dividends or interest and the capital gain from mutual funds in that year, you will be taxed. In this situation, it's like your money is in a retirement account. It's deferred, right? So that's something about the cash value. Then the distribution from the life insurance contract is treated on the first in, first out LIFO basis. So basically say if you withdraw the cash value, that actually is LIFO, which means your basis will coming out first. So when you withdraw your basis, so those money is you already pay tax on it, so it's tax free. So until you exhausted the basis, you start taking the earnings, the gross earnings on those basis. So then you be taxed on those. So this is LIFO. So general idea about life insurance tax. So this is the basic information. However, in reality, there's more complicated situations. We're gonna talk about this. So basically say, well, it's an income tax situation. Then also you have an estate tax situation. So before we were talking about only income tax. So the death benefit income tax free to the beneficiary. If you are, if the owner want to withdraw the cash value, so you are taxed as, FIFO. So those are the income tax aspect. So we talk about the death benefit. Is it tax free to the beneficiary? However, another situation, the death benefit may not be income tax free is when the life insurance policy is being sold to a third party. So in this situation, the buyer will receive the death benefit. Then those death benefit is not income tax free to the buyers. So that's something you want to know. Then also another situation side, this is called accelerated death benefit. So basically when the owner or the insured, get terminally ill, get disease, gonna die soon. So insurance company will make agreement with the owner, say, well, you need the money, we can withdraw the death benefit. Instead, wait until you die, beneficiary get the death benefit. Therefore, say, let the insurance company pay you the death benefit earlier. So that in this situation, the owner receives the death benefit will be income tax free. However, there's all kinds of rules, limitation on it. So that's something you want to know. So you can see there's a different situation regarding the death benefit. So we talk about withdrawal. Withdrawal is LIFO. It's FIFO. All kinds of withdrawals. You withdraw from the cash value. You have a policy surrender. Then you have a dividend options. So basically, a lot of times withdrawals is FIFO. Then you have to know there's another type of life insurance policy being identified as a MAC. So MAC is basically is the type the type of life insurance policy being identified. This is a status. So I have a video on this. So basically, if your life insurance policy is a MAC, so basically any withdrawal will be LIFO. Basically, your earning coming out first going to be taxed at an ordinary income tax rate. So basically, they prevent you withdraw for all kinds of situations. So watch the video on the MAC side. Now we talk about estate tax. So the death benefit is income tax free to the beneficiary. However, the death benefit is included in the owner, which is also the insurer, to tax gross estate. So if you have a significant larger estate, you will be taxed on the estate subject to estate tax, which is 40%. So the life exemption amount is 11.7 million in 2021. And so if during the lifetime you have been gifting, so those gifts will be included in those estate together to exhausting this 11.7 million. So that's just something you need to know when you have a larger death benefit of the life insurance.